Welcome, dear traders. At the beginning of the week, policymakers' statements were the main driver of trading. In addition, worrisome geopolitical news, renewed interest in the safe haven assets. Let's take a look at the Monday's session unfold in the Asia-Pacific region. On a Friday, the head of the U.S. Federal Reserve said that it was too early to expect monetary policy easing. At the same time, Jerome Powell noted that the regulator's current setting were in the restrictive territory, slowing the national economy. In particular, U.S. manufacturing activity has fallen for 13 consecutive months, while inflation slows. After the initial unemployment figures jumped to a two-year high, all eyes will be on the U.S. jobs report for November. Judging by the movement of the U.S. currency, markets were more concerned with the reports on the manufacturing sector than with the cautious warnings from the Fed chief. Following the release of this data, the US dollar index dropped below 103.20 against its six major counterparts. However, Monday's Asian session saw the greenback gaining ground against its counterparts, mainly due to the increased safe haven demand, supported by a resilient US economy. As a result, after testing the three-week lows, the US currency consolidated within the sideways range of 103.00 and 103.40. Nonetheless, it started Monday's trading lower than last week's levels, as the markets seem to have struck off the conventionally hawkish warnings from the Fed head. Moreover, with a growing confidence in a rate cut in 2024, the US dollar looks increasingly vulnerable. As the US dollar index tested its three-month lows, its Japanese counterpart managed to rally to three-month highs. After the release of the US statistics on a Friday, the pair slumped sharply to 146.70 and was trading near that level in today's Asian session. The Japanese yen could have strengthened even further, but its growth was slowed by comments from financial officials. Speakers at the Bank of Japan over the weekend warned that it was too early to refrain from negative interest rates. As a result, the yen was heavily dependent on the US dollar at the beginning of the week. At the same time, the yen is in demand as a safe haven asset. As a result, the currency continued to trade within a narrow bearish range of 146.20 and 146.90 in Asian trading. The fundamental technical indicators also point to further bearish movement for the pair. On the other hand, a strong yen puts pressure on the domestic equities and makes Japanese assets more expensive for foreign investors. The Aussie dollar pair also entered bearish territory early Monday, after rising to a 5-month high of 0.67, and the Aussie dropped back below 0.6650. Today, the Australian currency is trading under the influence of two opposing forces. On the one hand, the pair is being pressured by the moderate growth of the US dollar and the market's risk aversion. At the same time, the Aussie was supported by the rise in oil prices early Monday. In addition, the possibility of a hawkish decision from the Reserve Bank of Australia cannot be ruled out. Australia's inflation indicator turned positive in November for the first time in 3 months, and the Reserve Bank of Australia head Michelle Bullock reiterated that the regulator would be ready to raise the interest rate in a case of a rise in prices. Nevertheless, caution and wait-and-see sentiment prevailed in Asia today. Against this backdrop, the Aussie dollar pair moved down to the 0.6636 and 0.6692 range. Meanwhile, the Aussie risks approaching the support level near 0.66. Last week, the Reserve Bank of New Zealand left its key interest rate unchanged. At the same time, the regulator maintained a hawkish stance due to the higher core inflation, and this outlook provided support for the Kiwi, which was able to strengthen above 0.62. Today, the country released its third quarter overseas trade index. It fell by 0.6% compared to the previous reading of 0.3%. Both import and export prices declined, and this slump is an argument against raising the interest rate and the reason for the decline of the country's currency. Considering the strengthening of the US dollar and the bearish reversal of early on Monday morning, the Kiwi was poised to slide down today. As a result, the Kiwi dollar pair saw a steady decline in Asia, trading within the range of 0.6174 and 0.6224. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you soon.